Hey everyone, welcome to the KE Report, a daily editorial on Monday, July 14th, chatting with Erik Wetterling, founder and editor of the Hedgeless Horseman. Erik, as we always do, we'll talk mostly junior metals, equities, and the gold and silver price, tying those all together. I really want to focus on silver here because silver has been one of the best performing assets this year, especially in the metals complex, or at least the ones that we follow, where silver is up over 30% this year, actually outperforming gold. It's at a 14-year high. And we're seeing silver stocks doing really well, even the smallest ones. I'm noticing the smallest ones recently moving the best, or we could consider them some of the lower quality ones moving the best. But hey, higher silver price, that also helps. We do have the silver price closing in on that $40 region. It opened today right around $39. Little bit of weakness, but really not much. We're still 38.63. So, Erik, in this environment where silver is outperforming gold, we have seen this a few times in this cycle. What is your play? What is your takeaway from silver taking the lead in terms of the gold silver ratio?
Well, the big thing that stands out to me is the fact that, the sentiment is really improving. I mean, when you look at it, silver is up $3 from the high of 4 months ago or thereabouts. But I would say most silver juniors are up quite a bit more than that. So I would assume not that much have happened fundamentally, especially if we're talking exploration plays, let's say. But they don't have that much impact of what the silver price is today, and not 4 months ago either. But they're up a lot. And of course, the silver space is the smallest space. There's not too many names, and it's famous for being where, let's say, the most high risk or the most speculative investors, retail investors, typically like to play, because silver is known. The allure of silver is that it could go to $100 quickly. It could go to even, whatever, starting at 50, 100, etc., etc. So the idea of quick high returns is very appetizing for a lot of people, and silver is typically the go-to metal. It's also the one that basically, performs the worst, or have performed the worst over the long term. So, this is kind of what you would expect to see if retail sentiment is starting to turn around and people are feeling like more returns are imminent, because, that's what it is. When an uptrend starts to form, it just starts feeding on itself. And we're seeing this as well with, gold and silver. They're not up that much. Gold is not even at a new all-time high compared to a couple months ago. But I would say the gold juniors, most of them are also higher. So it just is saying that, or it suggests that fundamentally not much has become that much better, but the prices are up, and it's formed an uptrend in a lot of the juniors, and that's very appealing to a lot of people. Nowadays I'm seeing a lot of, get in now, because these stocks, etc., are going to go higher. Whereas, like, obviously a year ago during the lows, you didn't have any kind of FOMO at all. People were leaving the sector. There were crickets on Twitter in terms of, bullish sentiment. So it's just, fun to see. And this is, what I've been betting on for the last few years, basically. I knew this was going to happen. It's not like we're at euphoric levels, and I'm not whatever. It's not like I'm Nostradamus to predict this, because this always happens. So I just think it's a sign that sentiment is indeed improving. But of course, that also means that stuff that goes up a lot in a short time frame due to sentiment, they can also pull back only due to sentiment in a short time frame.
So yeah, I think sentiment is kind of the key aspect here where look, we saw the majors lead, we saw gold lead, and now you're right, gold hasn't done anything for almost 3 months. It's moved sideways. It's, we could say, consolidating a lot of its gains, but quite frankly, it's not hitting all-time highs every week or every month over the last couple. Silver, which is the smaller market, as you said, that's really started to take the lead. That breakout in early June, and then now just this recent breakout to close to $40. That's a smaller market, and we have seen a complete shift in terms of what I saw, the leadership in the gold stocks and even the larger silver stocks. It's now moved down to the juniors. We've seen this rotation of money. But Erik, that then begs the question, yes, this can last for a while. Yes, these juniors can keep on moving, but we are seeing, I think, some of the lower quality stocks, the ones even without resources or the ones with resources that didn't make money even in the $30 range. Now they're starting to move. So it's much more of a risk on, yeah, get in right now type of environment. But what comes next? Yes, it can last for a while. What needs to happen to keep this momentum going if gold, let's say, doesn't make some new all-time highs in the near term?
I mean, basically, whatever needs to happen for there to be more buyers than sellers, and I can't predict that at all. It's like I had no idea this sector was going to get this cheap. I wouldn't have predicted that. I didn't know when it was going to start acting like this. I didn't predict that. It just, came about. And to your point about, I mean, everything kind of starting to move up, and that's, I think, the key thing. We talked about this before. I mean, at sentiment highs, you're almost not going to see a company, even how early stage or shitty their project is, trading for less than 10 million market cap. And we're starting to see that. I mean, if this continues, I'm expecting huge pumping in microcap companies, for example, because they're also easy to move, and that also happens in the junior sector, especially the less sophisticated it is, where people actually look at the market caps of companies to have a sense of if they're cheap or not, even though the market cap is not saying much except for what the market cap is. I mean, there's stuff that's probably at 100 million or 200, 300 million that might be cheaper than something at 10 million right now, but it's just, a lower market cap, easier to move, let's say, and that's going to attract a lot of people when they see swings like that. And that's why I also think that it's very important, or I think at least, I mean, I'm not looking for an exit anytime soon. In my opinion, I mean, if we're expecting a major top one day, I would expect euphoric sentiment where shit is literally flying and trading at I don't know what types of multiples, and you have premiums on even NPV studies, which I don't see yet in pretty much any junior trading at a fair value to their NPV, even if you discount it because a PA is often optimistic, for example. So I'm not looking for exits at all right now. I think there's a lot of dirt cheap stuff out there, but I would say that I think, I mean, if you're gonna ride, let's say this is a multi-year bull, if you're going to be able to ride that, I mean, you do still need to have conviction, because it's not always going to feel like Friday, for example, where everything goes up. It's, super easy to make money. You can buy whatever thing that has silver in its name and it's going to go up. That does not mean that's a good company. That does not mean the silver price has any effect on that crap project, for example, but it's still going to go up. But there's going to be down days as well. So it's like, and also, you said, risk or appetite for risk is increasing. That's also true. And we've discussed this before, where at the lows, potential is not going to be discounted at all. Nothing is going to be priced in because that's risk taking. But if we go from the lows where no potential is priced in to, let's say, again, highs or euphoric highs in terms of sentiment, maybe a significant amount of blue sky will be priced in at that point. I mean, for better or for worse. So personally, and I've said this before, I think that when we go from absolute bottom to absolute top, I think some of the names that will move the most are the ones who have a lot of blue sky potential as well. And note that that's speculative, but that's how the sector works.
So, Eric, I find it so interesting to balance out the short-term chart. Say you look at a daily chart that maybe goes back a year compared to the long-term charts, because the long-term charts show just how washed out these stocks were. But these short-term charts over the last year, they start in the lower left and they move to the upper right. And to that whole euphoric move, I think we do need to take a step back. And there's a couple smaller silver producers that I follow. And we go to June, beginning of June, silver is up about 17%. I'm looking at two small junior producers here. They're up about 100% in that same time frame. Now, again, long-term chart, they're nowhere near any multi-year highs. They are at 1, maybe 2-year highs, but we have seen a huge outperformance in these junior stocks. And my worry is that money comes into the sector in the big guys. Some of the speculative money comes in the small guys, but that's usually short term hot money. So we are seeing just a massive outperformance of the silver juniors compared to the silver price. Silver, though, everyone's saying should be going to $50 once it breaks this $39, $40 level. Do you think then that these juniors, these silver juniors, then have another, what, 3, 4, 500% on the top of that if that all happens in the near term?
I mean, I wouldn't rule anything out. I mean, we're seeing examples in many other markets, for example, or sectors in the markets where, I mean, when sentiment gets hot and then gets red hot, I mean, you'll see multiples, etc., that you couldn't or wouldn't believe. So I'm not against that at all. It's like, in my opinion, this sector and any sector is really, really stupid at the lows and gets really, really stupid at the highs. That's why it's like, what's the saying? The market can stay irrational longer than you can stay solvent. So I wouldn't be, I mean, even if I think, for example, some have gone up very, very quickly, and that's suggesting of hot money, unless something fundamentally changed that warranted that kind of a move. Then it's, mostly sentiment and money flows because of sentiment, which is, I mean, preferably, I of course prefer to have stuff go up for, let's say, good reason. But if they're cheap and they suddenly revalue a lot, I mean, that's also a good reason in a sense, because they might have been really, really cheap. But that's also the dangers of it, let's say, because if something goes up a lot for no particular reason than sentiment, that means also that, again, if that's the driver, that could also be the driver on the other way. And I prefer simply to stick in names that I think are still very cheap, and preferably if they go up, let's say 100% in short order, which let's say I think they should, that they would still be cheap, because I'm very bad at selling. So I want a long runway preferably, and I know that, as I think you know as well, that yes, some of these illiquid, especially silver names, they are the ones that can move the most with the least amount of capital, and they tend to be, of course, the ones that attract a lot of risk takers, even though long term, well, the entire mining sector is crap long term, and especially I would say the silver sector is probably the worst of them all. But that's also thanks to the abysmal performance of the silver price. That, I mean, it's probably one of the worst or the worst performing metal over a long period of time. So maybe that's not only because the companies are bad or anything like that. I would just say that, I mean, historically speaking, no, not many juniors are worth long-term holds. And I'm just going to say that if you know that something is, going up, let's say mostly on sentiment, be aware that unless it's a, legit and good project, that's also what's going to kill it on the downside, especially again, if it is not a legit project. But I wouldn't rule anything out to the upside. But I'm also going to miss most of the absolute probably best performers, which is typically illiquid silver names, for example. But if I don't believe they should go up several 100%, for example, then I'm probably not going to be invested, because then you are in the greater fool trading strategy, and that's very uncomfortable to just talk about. It's like, buy this because somebody else is probably going to buy it even higher, and if you don't have a very good fundamental reason. I just personally try to stay away from that, but that also means I'm probably going to miss countless potential rocket ships.
Hey, in all fairness, I think sentiment is going up because the metals price is going up, and everyone's looking at that $50 level that has been historically a top, but also has been reached very, very quickly when we do see these spikes. Since you're mentioning that, look, you like to focus on these stocks that are cheap, a couple questions here. One being, how do you value them? How are you comparing these stocks to say this one's cheap compared to some of these other, let's just stick to silver stocks, and care to share any silver stocks that, again, are cheap in your eyes?
Well, that's also, I was going to say, where it becomes kind of hard, because I own, I have positions in some silver juniors, and most of them are not high conviction plays. I mean, one I actually really like is BlackRock Silver, and it's not one that I would necessarily expect to just from out of nowhere go up hundreds of percent, etc., because it's certainly not the riskiest. It doesn't have the lowest market cap, for example. But I simply think it looks like a very robust project in good jurisdiction and all that. And I'll, trying to take care of the downside more than, like, if you take care of the downside, the upside takes care of itself in a sense. So I mean, if you compare that to other deposits, it's very high grade, and we might have talked about this 2 episodes ago or something. But then I also have some of, let's say, a Silver 47, which recently merged with the Summa Silver. I actually had shares in both of them. I mean, I like their projects. I don't know how much, let's say, synergies it is with them merging, but at least you, in a sense, I guess, get a North American focused silver bank with, I mean, upside potential in all three projects. So that's probably, could be quite appealing, even though there's not obvious synergies, but they can, we have this amount of silver on the books, etc. But again, it's one of those where I think I could make money on it, but I right now I don't, try to promote it too much, even though I do think it's cheap. And yeah, I mean, other names, I'm trying to come up with some other. There's a new one, Prince. I think they today renamed themselves Prince Silver. They also have some silver. I mean, it's a low market cap. And that's also, I mean, I'm not even too in depth with their project. I simply, took a position. I haven't really talked much about it because those are kind of, small bets on, yeah, they're kind of unfollowed, kind of lowly priced, and they might do well. But those are typically not, unless I dig into them and get very high conviction. I don't try to talk about the ones too much where, let's say, I'm more betting on sentiment rather than, exceptional fundamentals, and I clearly know what I think the news releases are going to be over the next 12 to 24 months. So yeah, I mean, I'm on board. I'm on board on this silver trade as well. It's just that, in my opinion, still, I think gold juniors are cheaper than silver junior. So I have mostly gold junior exposure between the two. But I do think if this keeps on happening, I mean, if the sentiment goes higher and silver outperforms gold, I mean, I would expect anybody with a very silver focused portfolio to blow my more gold weighted portfolio away. And that's okay in a sense, because like it's a marathon, not a sprint.
Hey, Eric, hopefully this is a marathon. Hopefully this bull market truly lasts a decade. Right now, this has been a bull market for over a year. We're easily into the second year of this bull market with all the breakouts in gold and now silver following. This has followed the playbook of past bull markets where gold leads, silver leads, and then it seems like silver spikes and we get a little bit of a consolidation for gold, and that has sometimes ended the bull markets. But hey, this one right now, we're just in the middle of it, and we are really seeing the juniors start to take the lead in money, just fly into these juniors. So I assume everyone listening on this show is pretty happy by the action in their portfolio. And now I think we're all just hoping and waiting that this bull market continues and the juniors continue to perform the way they are. And I'm personally hoping that the majors start performing again and we get some more gold breakouts so that gold leads, because hey, that gold silver ratio, it went to 107 this year and now it's already down to 85. So we have seen a pretty big shift already. But hey, Eric, lots for us to talk about in this sector because, as I said, we're in a bull market. Stocks are moving higher. Again, Erik Wetterling is the founder and editor of the Hedgeless Horseman. Click that link in the show notes to visit his website. Eric, thanks for your time today. Have a great rest of your week.
Thanks, Corey. The same. And as always, consider me biased. I'm shares of all companies mentioned. BlackRock Silver is a banner sponsor as well, so twice biased.